Well, of course, it's been an extraordinary first 6 months of the year. Once the COVID-19 crisis hit, our first focus was on taking care of our employees, our company, and taking care of our customers. And the underlying belief, of course, is if you do that well, the financial results will also follow. And I think you already alluded to it. We had a very strong first 6 months of the year. We've seen the non-life company indeed being very resilient. We're not so exposed to event insurance, to travel, and some of the business interruption insurances that are very impacted by COVID. Our solvency is very strong, so therefore we were able to resume our dividend payments that we temporarily suspended. So yeah, all in all, a very strong first 6 months. Now, on your question on looking forward, we've guided that we expect an overall impact of COVID-19 of around 100 million. So that's for us a very manageable number. So the real focus is actually on the strategy that we've launched at the Capital Markets Day in June, which is creating value for all of our stakeholders around us and growing our capital generation by a mid-single digit. And we're planning on doing that by growing again in the European and the Japanese markets once they open up more, integrating the Vivat business, for example, in non-life, and also growing the bank and the asset manager.
David, you said a few things back in the statement to the market in June that I just wanted to pick up on and see whether there's been any evolution of that. You talked about lower premium income as a result of Europe and Japan opening up quite slowly at this stage. Given where we are now from when you made that statement, are you more optimistic actually that we might see premium income rise and that you actually might also be able to put through a little bit of a premium price rise?
Well, if you look at the premium development in the European markets, we've seen that indeed the sales went down very much during the lockdown. But we've seen it in May, in June, and July actually a good pickup of sales. So as long as the economies keep opening up, I expect still the sales to continue to grow. We also see a difference between channels. Our proprietary channels and broker channels actually do very well already. We can do distance sales. There's a lot of online availability. The bank channels are a bit lower still because there's obviously a lot going on in the banking landscape. In terms of the non-life company, in terms of premium increases, yes, it's still a pretty hard market, I would say. We still see room for premium increases. There's still books of businesses that are under pressure. See, for example, the disability book, also on the back of COVID, where we see an increased amount of claims, more disability, more stress-related, especially in the medical sector. So those are probably areas where over time we would expect some premium increases as well.